Traders, welcome out to your RBA rate statement. Tonight we are going to be trading it live, and we've got some ground to cover here to be prepared for that. Let me first start with market expectations. So if we come into forexfactory.com for a second, we'll be able to take a look at that and see that they're expecting a 25 basis point rate hike. So we're currently in Australia at 2.85% central bank rate, and it's expected to go to 310. That's a 25 basis point hike. Let's think about context of that. So if you click on the little graph here, you can kind of see the trajectory of things, and you can see that this is very similar to central banks around the world, where we were in a rate cutting cycle for many years. Then we were basically at a zero interest rate policy around the globe, and that has changed in 2022 in dramatic fashion. So notice the rate hikes, and the expectation is that we're now going above 3, so this bar will go up even further up here to 3.1% on the central bank rate. So that's kind of the mode that we've been in. Now let's think about this next level. If I come over here, we can compare this to central banks around the world, and you can see that Australia going to 3.1, I mean, that lags Canada, that lags New Zealand, which is probably most associated, most similar to Australia. So Australia essentially has much lower rates than the majority of countries out there, even New Zealand as a competitive comparison. If they go to 3.1, they're still way behind the 4.25 there. They're behind US and Canada and Great Britain and all these other countries and such. So they've got room is basically what I'm suggesting is that they've been a little more dovish. They've been a little bit more behind. I would certainly expect them to go to 3.1. It wouldn't shock me if ultimately they're going to kind of point towards even more hikes and more things in the future, whereas New Zealand probably is getting closer towards the finish line on their side. I think Australia has a little bit more room to go. Now, they may still continue to lag New Zealand, but they're 1.5% behind, something like that, which is pretty significant in the grand scheme of things. So with that being said, there's a couple of different ways to look at this. You could say, well, why is Australia, what are they worried about? What do they see? And why do they keep rates low, which is more accommodative, right? QE versus QT. Money printing versus money tightening measures. Why is most of the world kind of transitioning here, but some of the world is holding out and more in this camp? And I would say that Australia is, as far as comparisons, New Zealand's more over here, what we would call hawkish. And Australia, I mean, they're not Japan or anything. They are raising rates, but they're at least more, in the middle. They're not as aggressively tightening. Now you can look at that glass half full, glass half empty. You can kind of say, well, that should be, if they can keep rates lower and, not drive the economy into the ground, that could be good for Australia and good for their economy. The flip side of that is, of course, they might be really behind and they let inflation kind of get out of control and so forth. And so fundamentally, there's sort of 3 possible outcomes if we were to draw up a picture. I could see, around the world, there's really, I think, 3 main things, 3 probable outcomes. One is that inflation comes down and the economy has a soft landing. And this is like the Pollyanna, this is like the best case scenario, right? I would give that the lowest odds of success. The other is that inflation stays too high. It doesn't come down as rapidly as people want, meaning that the Fed and other central banks have to continue to raise rates further and longer than expected. Or the last is that they've already done too much. They've already raised rates too far, the economy already comes to a screeching halt, and so on. And 2 out of the 3 are really bad outcomes for economic conditions, for the probability of moving into a recession. And I think these 2 outcomes are the most likely. So if I were putting odds around it, I would say there's at least maybe an 80% chance or something of these, and maybe there's only a 20% chance, because the odds that we're raising rates, we're doing all these sorts of things, we've kind of bubbled up, and that the economy just comes gliding in there and all is well, and inflation comes down like they wanted and it stays at 2%. I mean, I think that's asking for a lot. The probability on those things just kind of falling into place so perfectly, it's not a 0% chance, but it seems very unlikely. And this would be the positive outcome. These 2 down here are more negative for risk taking and so on. So again, I think Australia has room to move rates up. And one would look at that as usually if they surprise in their rate hiking, that should be good for the currency. Well, the Australian dollar's not flourishing. This is a daily chart. You can kind of see in terms of the technicals, if we were to even back out a little bit further, maybe we'll come out just a little bit further, you can really see that the trend has been lower. Okay, if we were to look at this overall trend, we would say, well, you're kind of moving from, whoops, why is that not cooperating? But you're kind of moving in this downward phase here. And recently, we've even started to roll over a little bit, as you can just see by these highs, right? A little bit lower high here and kind of drifting a little bit lower in here. Now it's choppy, and I would call this quite sideways, maybe more than anything else. But the overall, you'd say that the Australian dollar's in a bear market. This is not a bull market. This is a chart that's continually getting weaker and weaker. It's not that dissimilar to maybe the New Zealand dollar, although New Zealand dollars bounced up more recently. The Canadian dollar, which was stronger, and then it's really fallen apart recently. In the midweek last week, I highlighted the CAD thinking that we would get a little bounce in here, and we bounced for one day, and since I was highlighting it on that day, it was pretty much non-existent bounce for a trade. In fact, I tried to trade the CAD for a trade and got stopped out. So I thought that the CAD would have a little bounce here and then continue on its downward path. It couldn't even do that. I mean, it's just down, 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 down. And where it should have put in an exhaustion with that big red candle and bounce for a couple of days, it bounced for one. That's all it could muster, and then right back down. So, I mean, if you look at the CAD, it's at an extreme. You don't get oversold, overbought on the RSIs very often. And this is down there at a more extreme oversold condition, but it kind of speaks to the weakness. So Australian dollar comes in with this kind of choppy behavior. Do we rally? Do we sell off? I would say the following. While I think that the Australian dollar could be strong here, there's really only one trade for that. The only thing you can really match the Aussie up against where it's better, where we could say the Aussie is superior and stronger on the chart, there's only one currency that's really been weaker and that's been worse, and that's the CAD. The Canadian dollar is really kind of the only thing that's been been trading poorly or more poorly than the Australian dollar. The CAD's it. Everything else essentially has been in better shape. So if we're looking at Australian dollar trades, I'm going to click over here to Aussie CAD, and that's probably the trade if you want to play the Aussie to the upside. That's it. I mean, that's about all I could get behind. If we were to click through all of these other charts, you would just see, I mean, here's the euro against the Aussie. That's euro strength. That looks like the euro is going to break out to the upside against the Aussie, right? The Aussie is worse against the Swiss franc. it's worse than the US dollar. I mean, the list goes on and on. We don't need to look at all of them. It's basically worse than most everything, just in terms of that time period. I suppose, the U.S. dollar has been weaker. Um, I suppose you could make an argument for that, along with uh, Aussie against the CAD, but that's probably about it, is those two. Now, if you wanted to short the Aussie, I think you could do it against the euro and the pound and the Swiss franc. I mean, those would be the obvious choices, in my opinion. So matching them up where you're buying one of those three and shorting the Aussie probably makes a ton of sense as well. Now, if we go to EUR.AUD, I wanted to look at it on the 4-hour time frame, which I kind of, the Aussie CAD, pardon me, which I wanted to look at on the 4-hour just to highlight something here, which is set up a system that I look for. Notice down here when it hit this lower Bollinger Band, which is the purple line, and we were above the 50 MA, we popped. Notice right here, you hit this lower Bollinger Band, you were above the 50 MA, and you popped. We're currently, we hit the lower Bollinger Band, we're above the 50 MA, you certainly could pop here. This is a 4-hour chart. It rallies for, 4, 8, 12, 16 hours, something like that. You could stack a few candles up here and kind of work your way at least up towards the top end of the range. So this was one chart that really stood out to me in terms of Aussie on the upside. Again, Aussie CAD as a potential long. Now I mentioned I suppose you could go with Aussie USD as well as a possibility. I didn't like it as much. It's deteriorated a little bit more recently and so forth. So I think that's the trade for me, would be Aussie CAD. On the flip side of that, I'm going to be considering Euro Aussie, pardon me, as probable the Aussie short idea. Here you can see we broke out of the range and we're kind of on that little retest. Should essentially, I mean, it wouldn't shock me if Aussie's strong, if it kind of breaks down here. But if it's going to hold right here, again, you could see a swift move. This one, you'd probably be a little bit more quick on the trigger. If you're trading the Aussie against the CAD, I assume we'll probably be in it for 4, 5, 6, 7, 8 hours, probably into tomorrow morning as a real possibility if it's working. If you're trading Euro Aussie, my guess is we're going to be in and out of it within the next 4 hours. It just has more beta, more volatility, more pip movement. We could easily be buying here in the 154.40s or 156.40s and playing it up for a pop just above the 157s and bailing out. So I would have those ready, as we always say. You could snap a buy order on there. You can put in your quantity and such, however much you wanted to trade. Let's say you were going to do 2 lots. I'm not going to trade on this one, but you could attach bracket orders if you wanted to, where you plug in where you want your stop and your target to be located. And let's just put in some hypotheticals here, something like this. And we're getting the announcement right now, so let me jump over because it's going to come right here. So look, the initial reaction was Aussie basically strengthening. So this would be where we would go. I think we can buy it here. I mean, I would buy, let me do it here. I would buy right here. What are we at here? 0.9121, something like that. So I'm doing it on my other screen, but I'm fine buying right here at 91.21, something like that. And we'll play this to the upside. I haven't put in my stop yet, but let me do that as well. Again, I trade on a different screen, but we don't need to be, I'm going to put in my stop right there just below that low. So sorry if it freezes the screen sometimes when I'm doing the other side, but basically I'm just putting in a tight stop right below that low. Now if you look at the low, it's 90.96. I put in my stop at 90.94. So 90.94 stop loss. And on the entry, it was 91.21, and it's possible you got a little bit better than that. It was certainly bouncing around there, but so our risk is the difference right there, which is 27 pips basically. 27 pips of worst case scenario. And I think initially, you know, I would at least take profits on half or so up there towards the upper Bollinger Band and the top end of the range. So you get a little push up there into that 91, 75-ish level, you know, somewhere up in there would be certainly an area where I would be taking profits right up in that zone. So that's whether you want to take profits on half or the full position. If you look at it from a risk to reward standpoint, that's 54 pips. And that was unintentional, but that happens to be perfectly 2 to 1. Because 54 pips of upside is exactly double 27 pips of downside. So our reward to risk is 2 to 1. That was, again, that was not intentional, but happened to work out that way. We could see that there was plenty of room to grow up to that top end of the range. And the initial reaction on the RBA was the RBA strengthening. And, you know, I was just looking for a little burst of energy, kind of seeing which one would set up and kind of go from there. My guess is that the initial reaction was one to a more hawkish tone in the statement and such. So let's come over here and we can refresh and take a look at the RBA results. So let's refresh the screen. So they did come in at 3.1 as expected. So that's the first hurdle, is that they didn't shortcut it. They actually raised by market expectations. And then I'm guessing that they even signaled more rate hikes to come, that they're not done yet. You know, that would be the thought for why the Aussie's strengthening. And again, it makes sense to me that as a trade, this is where I was leaning today, even though the Aussies looked kind of sour against most of the currencies. They have room to move, and it's the trajectory, it's the direction that matters most. So remember, I mean, if you really think about things in terms of context, think about risk taking. Through this whole cycle where interest rates were going lower, and this isn't just Australia, by the way, the US, you know, Fed rates numbers, okay, our central bank rates look very similar, where we were downward going for most of these years. Look at where the markets topped out and started to get really hammered. It was right here in 2022 where we went really risk off. And sure enough, what followed? And we talked about this throughout this year, that we're in a different regime. This is a different situation than what has been in place for many, many years. We've gone from QE to QT, and that's a very real thing. In fact, M2 money supply, this is the first year in my life, and I was born in the 70s. I'm, you know, looking at 50 right in the eyes, and I was born in the 70s. There has never been a year where they actually reduced money supply, meaning that they printed more money every year that I've been alive. There was more money in circulation being printed and so on until this year. This year will be the first year of my life where money actually went down. Why was that the case? Well, because they had printed so much money to buy bonds, and what the Fed has now done, I'm talking US dollars here, what the Fed is now doing as the bonds mature, they're retiring that money. Essentially, they're ripping up the capital, right? They printed that money, they used it to buy bonds to drive down interest rates, and now when those bonds hit maturity and the money's paid back, they're essentially retiring the money. It's anti-dilutive. It's basically, boosting the value of the currency. It's fewer dollars in circulation. That's the first time that's happened in my life year over year. So this is a big deal. And again, I think Australia has room for more move. That's where this should trade higher. And so far, we're up about 20 pips. Can't celebrate too much yet, but we're up about 20 pips. And again, I think we'll travel another 30 or so. And then at least I think it makes sense to take profits on half. This has not been a market that's really been conducive to continuing to hold long term or anything. You want to be a trader in this market. There's not a lot of investment. It's more, quicker trades. Things where I've tried to take profits on half and leave half hasn't been as successful. The other half kind of duds and fails to have a lot of follow through in many cases here recently. So I'd be inclined to at least take half and maybe the whole thing as we get up there towards the highs. But so far so good. I mean, you can see we're popping and we're continuing to progress higher. So hopefully there's some good follow through here for a few more hours, and you can at least make the 50 some odd pips, and we should be able to squeeze out even more than that because should kind of go to a new high, but I'd be looking to take some off at that higher range. All right, we'll leave it there. Nice trade working there in Aussie CAD. You're basically at the point where you can start moving the stop loss up to break even as well, because usually when what you're risking has been achieved in open gains, you can start to move that up. We were only risking 20 whatever pips, and now we're up about 20 some odd pips. So we're pretty close to those levels as well if you wanted to start looking at raising stop losses and moving those towards break even. Hope you enjoyed it. Have a great rest of your night, and we will see you, well, I'll see you in the Maverick Currencies midweek on Wednesday as always. Thanks again, everyone. We'll see you next time. Goodbye.